Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 7th, 2025, and we're diving into Martin Marietta's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Martin Marietta, a leading supplier of aggregates and heavy building materials, has just released their Q2 2025 earnings report, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Martin Marietta reported revenues of $1.811 billion for the second quarter, a 3% increase from last year. John, how does this reflect on their profitability?
Indeed, the revenue growth is complemented by a 5% increase in gross profit, reaching $544 million. Net earnings attributable to Martin Marietta rose by 12% to $328 million. Notably, their adjusted earnings per share came in at $5.43.3, beating the forecast of $5.30 from 8 analysts. This indicates strong operational performance and cost management.
Operational efficiencies and future outlook. Martin Marietta's aggregates and magnesia specialties businesses have shown impressive results. Can you elaborate on their operational efficiencies and future outlook?
Absolutely. The aggregate segment reported revenues of $1.32 billion, with a 7% increase in average selling price per ton. Magnesia Specialties achieved record quarterly revenues of $90 million. The company has raised its full-year 2025 guidance, with adjusted EBITDA expected to reach $2.3 billion at the midpoint, reflecting confidence in sustained pricing momentum and effective cost management.
Strategic initiatives and portfolio optimization. Martin Marietta has been active in strategic initiatives and portfolio optimization. What are the key moves they've made recently?
Recently, Martin Marietta completed the acquisition of Premier Magnesia, enhancing their position in magnesia-based products. They've also entered an agreement with Quikrete to exchange certain assets, which will bolster their aggregates operations. Cash flow from operations was strong at $605 million, and they returned $547 million to shareholders through dividends and share repurchases, demonstrating a commitment to shareholder value.
CEO's perspective and market conditions. Ward Nye, the CEO of Martin Marietta, provided insights into the market conditions. What are his views on the current demand across different sectors?
Ward Nye highlighted that infrastructure demand remains robust, supported by federal and state investments. Non-residential demand is positive, driven by data center development and warehouse recovery. However, residential construction demand is subdued due to affordability challenges. Overall, the company is well positioned to navigate these varied market conditions.
Key takeaways. In summary, Martin Marietta has delivered a strong second quarter with record profitability in several segments and raised guidance for the full year. Their strategic initiatives and market positioning suggest a positive outlook. Thank you for joining us, John.
Thank you for having me. Martin Marietta's performance and strategic moves make it a compelling investment prospect.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Martin Marietta's performance in the comments below.